Hello and welcome again on Stocks Advisor channel. Today we will talk about BLNK charging company traded at Nasdaq, ticker name BLNK. Well, BLNK today was trading kind of neutral, finishing with slightly positive, but of course from a decline. And after hours we see minus 4.17%. Of course, this is based on the news and deeper, let's say, now losses than expected due to earning reports. Still, company's market capitalization is reasonably big. It's 1.4 billion. So you don't expect that much severe actions, especially if you look at the history of the company and the price development. It was really steady, though with reasonably big waves. So actually it went with two major waves. You can say the one took place in July. Then there was a lot of triangle-like consolidation here until the November, and then from November we started secondary wave, double wave here, 1, 2, with some volatility, overall deceleration of the growth, also with moving averages 20, 50 and 200 green, blue and red lines bending downwards until about 8th of February, and then the major correction started. And now what we see, and by the way, here on the left also you have moving averages description. So now what we see is the correction, and first it took so-called bouncing correction when we had actually decline based on this bounce move that we saw with the classical declining channel here. And bounce move means that if you have a declining channel, the price bounces on it as a ball would bounce on an inclined surface like this. So that's exactly what we saw here. 1, 2, 3 bounce, and then actually we started to create a trading channel instead of going lower. So this is really nice. Now we are sitting at moving average 20, and it is bending upwards now. So it looks like it's about to grow. So we're just sitting on this price, but after hours is lower. So it's a news effect, meaning that we most probably will return to this R1, R2 descending channel. And if this is going to happen, we might at least bounce a little bit on R1 and then go high, or to form the third actually bounce. And then the question is where it will rebounce, the third wave, let's say, this one. It might rebounce at moving average 200, or it might rebounce as well at actually R2. So with this being said, how to trade here? Of course, it would be the buy immediately between R1 and moving average 200 with the immediate buy call. So it will be then between 21.69 and all the way to 27 here. Yes, it's quite big, of course, but also you need to see that the volatility is also quite big for this one. So you need really to also have a broader channel. So whenever there is rebounds from this one higher, we still might go back all the way to moving average 20. We could make very nice profit here actually, but in general for these fastly moving stocks, it's advised to take between 15 to 20%. Usually it's 10 to 15 that we advise at our channel, but this is really volatile. So although also market capitalization is big, so 15 to 20% is for this one as a target for profit. And whenever you have it, really advises take it, don't hesitate. Really develop this tradition and strategy and culture of trading with profit, taking it and then re-entering if needed, or actually looking at other opportunities. You can also find plenty of them at our channel. So this is very important. What is still interesting here is MACD. You can look, it's making the first wave, but most probably after small decline, it might make for secondary big one. So it will be bounce on the top instead of going for the negative, because still it's a bouncing trade. And therefore we just need to catch that moment. It could be the first channel indeed, but also depends on the market. The negativity of the news could be also quite severe. Oh, well, not the news, but of course the reports of the earnings. Or in general, it could continue lowering down. Maybe another negative catalyst will come. You never know. So in general, it's not therefore very much expected here. It's still quite bullish in this sense. But if the decline takes place further, we need just to anticipate to enter at the lower levels, and therefore this would be the classical secondary level formed by December, end of November, but also previously by August price action. So this is really very principal level of support for this stock, which is let's call it S1, S2. And in money, in the levels of prices money, it will be actually between almost 15, so 1480 and about 19. So let's write it here. This would be between 14 way to actually 19 about, and this would be the second level to enter, still possible just on technical correction, because by that time it will be also somewhere in the vicinity of R2, so it will be still depending, of course, how in time it would take, but somewhere it will be within R2 as well. And this will also mean that we just rebound from R2 and S1, S2, making it a double support here. So both channels here are double support, which is very nice in that sense. Also means that probably we won't even go to second one, but if it happens, it happens. And then what if negative catalyst kicks in? Because we also don't need to forget that the price action that took place here, even just from August or just from mid of July, it's more than 10 times. But if you take from June, it's even higher. So still the question, did the company develop that much that it can validate the price action to be going 10 plus times for half year? If not, then of course the major correction could be very severe, especially if there is a small negative catalyst pushing it even lower. It could really go lower. And then thinking of how much lower it could go, again, we need to look at this flag that took place between actually July and November. So this flag will form for us the next levels, and then you can clearly see the first level would be 10 and the lower level would be 750. This will form for us the third and the final actually support, and kind of a negative news mitigator level, where you could not expected, of course, not expected as a price, but if negative catalyst comes, this is a very nice, very principal risk mitigating level where you could enter again, and while others will be maybe probably taking losses and exiting with stop loss, you will just enter again, average down, and on the rebounds take your profit again, 15 to 20% expected here. And again, whenever you have this profit, take it, don't hesitate. So that's the way to trade here. Still classical 5 portions play, because no major extra risks are expected. And it means that the money you would like to play here, you can split in 5 portions. You can buy with first portion in the first circle, with 2 portions in the second circle or channel, and if negative catalysts come, you can buy again between 750 and 10 with 2 portions. So this way it will be the best mitigation of the risks. And this is the numerical. If you are more for graphical representation, you can look here at the right. Overall, this is what we call a trading card. So you can print screen it, print it out if you like, screenshot it, save it, and use it further as a guidance for trading with this stock. And again, whenever 15-20% profit is there, the trading card expires, because then you need to reanalyze it again. So this is really fine-tuned for making this profit with this way of trading. On this being said, that's all actually for BLNK. So do not forget to subscribe to our channel if you're first time watching this video, and see you at another episodes of Stocks Advisor channel.